Hello, friends. I have been thinking about this for quite some time now. That I wanted to start this financial series about different companies, helping you in getting the multi-baggers and helping you in your investment journey. Uh, Today, I have come up with a huge multi-bagger which I've been tracking for quite some time, thinking about it quite some time. I have looked into the progress of this. I started first time tracking this company in 2021, and where the company was merely at about 7 rupees or 10 rupees price, to the point that now it is at 500 rupees price, right? This huge growth journey. I have been part of the investment, and the reason why I'm sharing with you is because there is a huge potential to for this company to grow further into the skies. Right, so my fellow investors, this is how I'm trying to share the growth story of the company called Autumn Investment and Infrastructure Limited. Uh, and we often spend our days changing the headlines. We look into the next Infosys, the next SDFC, the next Titan. But sometimes the most exciting opportunities aren't on the front page, they are hiding in the plain sight, camouflaged by a boring sector which is called NBFC. I'm talking about AIIL, right, as I have mentioned. If you think this is just another lending company, I'm here to tell you that you are looking at the cover of the book and you are missing the thriller inside yet another time. In the next 5 minutes, I'm going to show you why AIL isn't just a stock. It is rapidly evolving into one of the India's most interesting investment holding companies, right? On paper, it's a non-banking financial company or NBFC. They lend money, they invest, simple, right? But if you're looking closer at that balance sheet, you will realize that they are operating much more like special situations fund or a mini conglomerate in the making. The strategy is high conviction. They don't just sprinkle money around, they buy distressed assets or undervalued companies, turn them around, and hold them for a massive value unlocking. You remember RCF, Reliance Commercial Finance? Autumn acquired it. That was the first signal that they are playing in the big leagues. They have built a fortress balance sheet with a net worth that was compounded aggressively over the last few years. So if you look at the company right now, it's standing at 42,000 odd market cap. So let me show you this AIL. If you look at the market cap, it's 42,539 crores. The stock P is 11.7, ROC is 30.8%, ROE is 34.1%, which is massive. And 20 to 25% is the gold standard. If you look at to the debt to equity, it's 0.17. The PEG ratio is 0.14, showing there is massive growth potential for the company at lower valuations. And that's the exact reason why I'm sharing with you guys. Right. If you look into the story a little bit deeper, you'll see that, and you'll try to understand what are the catalysts, right? And the catalyst is nothing but the pivot to consumption, right? The pivoting to FMCG happened quite some time back. Now, here is the amazing part. If Autumn stayed just a lender, this would be a standard speech. But because they're pivoting to consumption, I think that unlocks a massive growth story in the Indian perspective. If you look into the recent news, Autumn is aggressive about diversifying away into from pure finance and into the Indian consumption story. So the first company that they have acquired few months back is Pratap Snacks. You have likely heard the news, and Autumn got the regulatory approval to acquire a controlling stake in Pratap Snacks. They acquired it. This isn't just an investment, it's a takeover of a major FMCG player. The second company that Autumn has acquired is the Big Cello. You would have definitely used at some point of your student journey or the corporate journey these cello pens. That's what the Autumn has acquired as a company. It's a famous stationery brand. So you see the pattern, right? So they are using the cash flows from their financial business to buy tangible consumer facing brands with massive distribution networks. They're transforming from a lender into a diversified holding company. This reduces their risk profile massively, right? So let's look at the company's balance sheet for the last few years, right? So if you look into the previous few quarters, the revenue has been a little bit of bouncy. If you look starting from December 2022, you would see that the revenue has gone from 93 to minus 118 to 973 in September of 2023 to 1,400 odd crores in June 2024 to 618 in December 2024, and back to 446 crores in December 2025. In a very similar way, the profit has been also a little bit bouncy, but nonetheless, you could see the company has a huge potential in terms of revenue and in terms of the profit implications, right? If you look into the cash flows has been positive and negative at times. But I think the biggest story comes out if you look into the investors portion of it, right? So if you see starting June 2023, where the promoter percentage was 71%, the FIIs were at only 7%, whereas the public was at 21%. Things have turned around, and if you look into January 2026 ownership percentages, the promoters stand at 68.79%. The FII is at 14.4%. It has increased massively. DIIs have started taking interest, so the DII percentage is right now 0.17, and public holding has reduced. So the money is getting exchanged into the strong hands. If you see, the number of investors is also 37 odd, which is very, very less, right? Now, looking at all of these factors, let's look at the health and performance of the company. Over the last year, the stock has delivered roughly returns of 47%. While the broader market has been volatile, Autumn has shown resilience. But I want to take a look at the ROE, right? The industry standard is 20 to 25%, whereas the company is at right now 34%, which is massive, right? If Same thing, the risks. I look at the risks and the reality, right? The Autumn is not without them. It's a mid-cap stock, which means volatility is the price of admission. Their quarterly profits can be lumpy, but their income depends on the investment gains and the market valuation, not just steady interest income. You saw it in their recent Q3 results, right, where the profit dipped, markets reacted, but in the long term, thesis remains intact, right? And if the Pratap Snacks and Big Cello as an investment turns around, there will be massive value unlocking that is going to happen. Now, just to conclude, Autumn Investment and Infrastructure is a rare breed, right? It offers the value investing principles of an old school holding company, but with aggressive growth. So don't just watch this talk. I think it's not a recommendation to invest, but you have to weigh your own risk profile and understand the fact where to invest and where not to invest. You have to take guidance and advice from your financial advisor. This is just a educational video to tell you what are the ups and downs, the risks and the investment perspectives for the company like Autumn, right? And having said all that, because you have watched the video till this point of time, please like, share and subscribe to support the video, and happy investing journey. Thank you. Thanks a lot.